Hey, everybody, just a quick update. We've got bank earnings this week, so I wanted to talk a little bit about that. Of course, as always, it is your trade, your responsibility. If you're okay with that, keep listening. If not, we'll see you in the next video. So we've got the bank earnings. So we're kicking off earnings season. We've got a ton of banks, investment banks, garden variety banks, all kinds of banks reporting. And we can see the XLF here, which is your select spider ETF for financials, is just coming a little bit off the highs here. You guys know I've been super bullish on Goldman Sachs, and that has had a really wonderful run. The two investment banks, I kind of like those big money center investment banks. They don't have exposure to the sort of personal lending, which I think at some point might be a problem the way things are going with AI, unfortunately. So I like it. They're in all the right places, but the stock has had a great run. We had a turbo and Turbo Trader Pro in the scanner program that I run. We had a nice trade on, took advantage of this move right here, got out of our long right at the top of this channel here. We're keeping the income portion on to just let that daily decay kind of work for us. And quite frankly, looking for another entry here because I don't think it's over. I think this is part of that multi-year expansion that we're talking about. So let's talk about the bigger picture and what's going on, right? So it's not just about banks. We know that there has been a broadening, a very strong backdrop from an earnings standpoint that is starting to develop now, right? So S&P 500 forward revenues per share just hit a record high in early January. Earnings have not been a problem. Profit margins have not been a problem. The recessionistas, the bears, I'm not sure what they're looking at parts of the population that are really struggling. Some of the sentiment indicators that I think aren't really as relevant anymore. They are relevant for the people who are feeling it, but they're not as relevant for the stock markets. It is driven by different things, and the distance between Wall Street and Main Street is as wide as it's ever been, and it's going to get wider, unfortunately. But we've seen some amazing GDP numbers tracking around 5% on average, 2 quarters in a row. You do not see that. That is very, very rare. It's extremely, extremely strong. It's remarkable at this stage of the cycle, but we know that this is driven by something absolutely new, which is leading us to our broadening idea. So it's going to be growth, it's going to be margins, it's going to be a lot of disruption. Now, one more thing, look at the share buybacks here. So we've got share buybacks opening up. The first ones that start buying back, of course, are the financials, because they're the first ones to really put out earnings, and you wait for earnings, you put out your reports, and then you can start leaning into buybacks again. So we'll see here how that plays out. Trading, we expect that blackout window is going to end around January 23rd, and then those flows are going to start coming in, right? So financials first getting going here. So let's talk about. So we're likely to see pretty solid results across the group. Loan demand is growing, net interest margins are still healthy, loan losses remain manageable. Loan losses, what's one of the things we got to keep an eye on if we're going to see a deterioration in certain parts of the economy and certain parts of the consumer side of things. Investment banking, I've just loved it. The IPOs, the deals, the exposure to this incredible expansion that's going to be going on in the US and around the world is just amazing. But it's not just about banks, of course, that we talked about. Everything's starting to really kick in a little bit, which is very, very important. But banks, very important. So we want to listen to what they say. They're very much at the intersection of many things that are very important, growth and rates and credit and all that stuff. So we want to listen to what they're saying. And my guess is they're going to tell us the economy is accelerating, that the signals are pretty constructive. So global demand has held up. We're seeing it explode around the world for certain commodities, for certain inputs that go into the build out. And so it's just basically AI is really trumping, as I've been saying for 8 months, it's trumping tariffs, geopolitics, rate problems. We're not really even seeing rates come down yet. We're seeing the broadening happen. We're seeing IWM do well, which is the Russell 2000. And that's really, really important. Now, JP Morgan specifically, I always talk about Goldman, so I thought, why don't we do something a little bit different? So that is coming tomorrow. This is one of those bellwether banks, in my opinion. Goldman Sachs, JP Morgan are really the cream of the crop. So if you really want to know what's happening with consumers and corporates and capital markets, you put all that together as opposed to just consumer lending or auto lending and things like that. You want to have that sort of broad view because, quite frankly, the wealthy are the top 10%, top 5%, these people are driving the economy, the retirees out there who have enjoyed their asset growth. These are really big things. And so you really can't ignore any of that stuff. So strong revenue growth last time, really good trading revenue, right? These guys are so smart. They've got their fingers in every pie. they know where to make money in terms of the Goldmans and the JPMs. So what I'm going to be watching this time, net interest income trends. We're going to see if those rate expectations are shifting here. We know that Trump is on the prowl. We're going to be getting a new Fed governor, and we're going to see if we get a little bit more than the sort of 2 cuts for the rest of the year. We know he's going to be arguing for it. So there's going to be incredible pressure, which is probably keeping a bit in gold, probably keeping a cap on the US dollar for now, even though it's been rallying a little bit lately. Now that we've framed that backdrop, I want to jump into the scanner. Let's take a look at financials in general. We've got Goldman Sachs, of course, Turbo. We've been playing that all the way up. Let's take a look here. American Express, of course, this is a bit more incomey. We can see the sort of trend lately weaken just a little bit, whereas Goldman is staying really strong, even though it's pulled back 20, 25 bucks. It's staying very strong. It's taking into account a lot of different things that go into this MTI indicator, positive direction on the trend as well. So definitely financials, S&P Global, right? This is another interesting stock that I think is one to look at. Robinhood kind of struggling here, even though this is one of my favorite trades. I'm not adding to this position. I want to see any more financials in here. We've got Rocket Company starting to look really, really good. One of my favorite vertically integrated mortgage companies or real estate companies. Very, very solid. SoFi, also in the financial space. Circle in the financials, but not really financials, right? Let's face it. So I think, from that perspective, I think Goldman's still very interesting. I think must be on here as well. But we can see that the usual suspects are not really doing that well. NVIDIA, Microsoft, Apple, the option pricing isn't in the right place. The skew is in the right place. The charts aren't in the right place. The fundamentals are absolutely still fine, although we're seeing a little bit of degradation in earnings in that space, even over the past year, right? So they used to account for a much larger portion of total S&P earnings, and they're still absolutely massive. But remember, markets react at the margin. And so if we see that start to shift into where we're starting to see some estimates rise, not massively, these aren't all tech stocks, right, in this broadening trade, even though some of them are acting like it, this is very healthy and steady move in. I said that in my video yesterday. I said it's about growth duration, right? Growth duration. Growth is great, but not if it ends quickly. We want growth duration. So if we start to see things that look like they could have multi-year tailwinds behind them, that becomes very, very interesting to me as a trader, as an investor. So I hope you enjoyed that. We'll see you in the next video. Right now, I'm still going to be focusing on Goldman and JPM as well. And we'll see you next time. Take care.